Starting live, sending data, online one, online number 2, and final online before I begin. There we go. All right, so now it's getting interesting. Holy crap. Okay, so I have given some previews in the past of what I've been keeping up with. Well, my hair looking crazy right now. Hold up. That's all right. And just absorb what's happening in front of you. So I've put these particular patterns I've noticed back since 2018, and I am very surprised that it's basically head on. Now, I'm almost freaking out that I can put lines on a graph and it'll predict itself. Like, I hardly can tell or say that I put these in any accurate date by date process. I expected it to follow some form of this, but to be exactly denied by that line, I don't know exactly what's going on. So here's kind of the gist, right? So I put these lines up way back since over here. Right, so this area here is when I actually put these yellow lines for guidance when we were going up, and then I noticed the pattern of a drop after. In the previous video, I go ahead and showed you why this pattern or these arrows even exist, and it is based on psychological level of values, right? 3 trillion was denied officially, barely, but denied. Now, that denial is going to be a small setback until we bounce back up around 2.4, which would be the support, the major support from the previous time we went up, plus this little denial resistance here in the past. So we're looking at about 2.4 trillion market cap before we'd have a bull run again. All right. That's step one, right? So this is kind of the general market prediction. It looks like it's going down for a little bit. This is not the crash. In fact, imagine the news that might be happening. Oh, crypto's crashing, da 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 da. People are gonna get scared, they're gonna sell off, and then the ones that kind of have an idea of the market are going to catch the fear down here. And then everyone that was selling up here is gonna buy back probably somewhere up here, right? The people that are in early make the money, the people that are in late make a little bit of money, but then hopefully they leave by the next psychological point of 2.6 trillion, 2.5, 2.6. I couldn't really be completely accurate, but that's my kind of estimation. Do I think it's gonna go up like this in the exact same manner? No, I don't know. I didn't think that any of these would follow the pattern that I'm seeing now, but obviously these lines are maintaining their course and it's happening, right? So I have not changed any of these lines ever since I began writing them down here. All right, so crypto is following the pattern that I imagined it to be based on psychological levels, the numerical psychological values, based on the patterns of the 2018-19 values of the Bitcoin 2000 to 20,000. And it's starting to look very, very reminiscent of those years. So I'm expecting, I've kind of taken out some crypto. I'm expecting to buy back down here, go for the next run, sell off when we get somewhere nearby, going down. Maybe I'll participate in this teeny tiny rally. I don't know, because it could be a small rally. Honestly, I probably will, because it could be a small rally. But in the previous video, I also said that because there's so many eyes on crypto, it could go up even further. So there's a chance that we do kind of repeat the past, but there is a good chance that we just go straight up from here because there's so much participation in crypto. I really have to watch the news and what's happening with the world, on the crypto world, in order for me to make a judgment, even as we get near to this arrow, because I don't quite know. But at the least, psychological levels should still play a big part. I'm going to sell at the 3.6 trillion value. And from there, we'll see what's going to happen exactly. So we're in a little bit of a downturn in crypto, small downturn. That's all right. We're going to get caught down here at 2.4. Going to go back into another bull run, and then possibly a big drop. And then we'll kind of continue analyzing. I mean, I'll post videos anytime anything interesting happens, and that's why I'm posting one today, because I'm seeing the patterns coming to fruition. Next, the general market. Now, I haven't changed anything other than adding these values, these lines here. There's some turbulence in the US market. Inflation is shown to be very high. Jobs are very high. There's a lot of jobs out there. And basically, not a lot of people are wanting to get hired or even going to the level of wanting to get a job at the moment. So a lot of vacant jobs, market's going down, a lot of earnings happening now. Financial sector is getting hit. That was expected at some point. I was expecting this last earnings, but apparently this earning is the area in which the financial sector, banks, hedge funds are starting to report negative numbers. So I do kind of see a small hiccup down to this area until another rally up, and then we would have our possible drop here, because again, we're still dealing with the United States debt ceiling. So that's going to be a major area of resistance, not only in the technical numbers value of $490, $500. 490 would be the place that I would be looking at, because people are going to drop before it gets to a psychological 500. But on the case of the United States debt ceiling, they're going to have to start talking about it and seeing if they're going to raise it or not. So this is the case scenario where I don't know what's going to happen. Either the debt gets raised, or the debt does not get raised and the United States credit rating gets taken down a level, which would cause a very big drop here. And it's still looking like it's going in the direction that I've set it to be. It could drift off into a specific way, but at the moment it seems to be within my range, and I'll keep it that way. The big players. All right, so here's the big stock players right now. I've been watching PROG. Where is SHIB, Loopring, Satima? Let's do PROG here. PROG is crazy right now. So on the general aspect, I'm hearing a lot of bullish futurist support, a lot of bullish support for PROG, because they've created a way for Humira to be injected, well, to be orally taken. Right? Normally, Humira has to be injected through a needle, and people hate needles. But Progenity, have created a pill for the same exact situation. Now, this is a good thing because people hate injections, and since Humira is about a $20 billion market, PROG is about 1.5 billion. Here's float, volume, market cap, not even a billion, so 460 million. And they're entering a market worth 20 billion. So they're basically overvalued. How much overvalued? Well, if we take the 20 billion that Humira represents, divide that by the 460, that's 1,000, sorry. We'll divide that by another 1,000. 100, not 1,000. Okay, and then restart that. 20 billion divided by 460 million. Oh my god, this calculator again. So that's trillion, that's billion divided by 46 million, 1,000 million. So it's 43 times undervalued. That means that if Progenity takes over the Humira market, or essentially does everything Humira does through oral medicine, then you're going to have this $3.30 be multiplied by this 43 if the market completely takes over. and Progenity would actually be about $140 per share if they take the market of the Humira drug, which honestly, consider the fact, would you rather get injected or take a pill? The answer is obvious. So the demand for Progenity is actually very good. That's the fundamental, right? So you got to think of multiple pieces. That's the fundamental, that's the is it doing good situation. Next, what's our technicals? Progenity has been destroyed by shorts, absolutely wrecked by short selling, which means not only do we have a fundamental growth, PROG, please, thank you. Not only do we have a fundamental catalyst to the growth of Progenity, we also have a technical short squeeze. So right now, the current utilization of all possible short shares, borrowable shares, is 99.9%, meaning that only 0.1% are left to be shorted, which means there's very little selling pressure left. 36 million shares have to be returned, or those are being loaned right now, but 21.11 million have to be returned, guaranteed based on the official release of documents. But the total borrowed are about 36.6 million. Some are going to probably be shorted, others not. But we can guarantee that 21.11 million of this 36.6 is actually shorted. And then the other 15 million possibly shorted, possibly going to be returned. We don't know. 50-50 means, well, let's call it 7.5 also on top of 21. So you have almost 30 million to actually be returned. That's about 43% of the total float. So the catalyst of fundamentals is there. People are going into PROG because of its new finding of the drug, of the oral drug instead of the injection drug. The cap that we're comparing PROG to is a $20 billion market versus its current 416 million market capitalization. So a lot of space to grow. And on the next step, the recent short selling on this is absolutely ridiculous. One of these bars, this bar here, a very recent bar, that's 13.5 million failed to delivers. These are shorts potentially not covered, plus give or take other issues that may happen in the failed deliver area. But right now, considering that these are the big poppy bars, look how much it was before. 2 million, okay, 300,000, more reasonable. 300,000 is a more reasonable value for FTD, failed to deliver. But 13 million for one bar, 9 million for the other bar, 15 million for the other bar. That's about 40 million shares not accounted for, meaning they borrowed and never returned, therefore they turned into failed to delivers. Eventually they have to be covered. So this tells me a lot. Not only do we have 36 million here, or well, 21 plus maybe 7 million, so call it 30 million that are estimated to be short sold. We also have another 40 million FTDs, and possibly even more because we don't have most recent data because of the 2-week settlement plus document release, right? So my prediction for this is that a short squeeze will happen because there's no selling pressure, nearly average of 116% cost to borrow interest. Big hedge funds need to pay a lot of money to keep on shorting this stock. The minimum is 40. That's already a lot, almost half of the amount that you initially began borrowing. Now you have to pay on a daily value. So consider that. This is what I normally look for in a short squeeze. Super high cost to borrow, super high utilization, and then actual shares that need to be returned, which exists both in regular reported estimated current short interest, and exist and fail to deliver. So they have a lot to cover, PROG is next to AMC and GameStop. PROG is my next big focus. I have about 1,500 shares. I used to have 3,000. I should have kept them, but I sold a little bit to get more AMC because AMC is on a round as well. Let's take a look at them. Let's take a look at what's happening with AMC because it's actually getting exciting. Very, very, very exciting on the AMC factors. Okay. Let's look at the daily first, get an overall perspective here. So we had a triangular formation ever since our June run-up. We've been fighting within this triangular formation for quite a while. We tried to break out of it, we fell, but we are continuously trying to break out. There is demand that wants to leave this triangular formation. Thus, we are entering the reversal. We are entering a bullish trend. We have been on a bearish trend for a bit, but not even, because you still see that the lower values are getting higher, right? Higher lows, lower highs. But now we're squeezing our way out. Do I have to remind people what happened last time when this happened? Down here, right? We tried to break out a few times, but we couldn't until finally we squeezed out. We squeezed out with one candle, which prompted the whole process. This was the $10 to $14 value, right? We kind of dropped a bit and then the bullish trend began, right? This was after earnings. Keep that in mind. This was after earnings and it was a negative earning. So, okay, fair. Well, we have a positive earning. We got an improved year quarterly earning process. Not only is it better earning than before when the last June squeeze happened, we're already looking much stronger on the exit of this pennant. We got a hit up, denied once, denied twice, even though we kind of settled outside, but we are now hovering on the edge, and we have yesterday, Monday. This is why now is the time for me to make a video. We have officially exited our pennant. We officially exited before as well, but the push down kind of put us back within it. This was a gap fill that has already been done, so I'm going to delete that. So we have officially exited with a strong exit plus the support exit from before. This is going to be the next step. What might happen is we could begin a bit of a bullish run. We could go, where's my arrow? We could go a bit up, compete with the last peak. We could drop down a bit, probably somewhere on the edge of this triangle. And then we get our boost up and explosion. Now this is what essentially happened back here as well. History tends to repeat itself, guys and girls. So we had that same sort of bounce up, it fell down, didn't really test any triangle. I mean, can I constitute this? I can kind of make this happen. Yeah, 1, 2, 3, okay, yeah, yep. This was the triangle. The more times that the pennant hits our lines, the more valid that pennant is. So let's call it this. 1 hit, 2 hits, 3 hits, and then break out. So it did come back down, hit our triangle, and then break out there. In a similar fashion, 1 hit, I wouldn't call that a hit. So 1 hit, 2 hit, 3 hit, breakout. That was the third, right? Just like last time. 1 hit, no. Oh yeah, technically this would be the 1 hit here. So 1 hit, 2, 3, and then breakout, 4th time. There is some pattern with AMC wanting to break out on the 4th round. So now this is the 4th round. It kind of broke out, but it didn't quite, but it didn't really drop back in. It kind of fought hard and officially broke out. So now we're expecting a small dump, not a dump, but possibly an attack, dropping it, trying to get people to get scared. We should, let me kind of adjust my triangles. my linear lines over here. So a nice hit here, possibly get this to be a little bit stretchier. Like that. Okay, that looks nice. So now I can, oh, this vertical line here is when I expected some sort of big movement to happen. So that's another random prediction I was trying to do. So yeah, we're gonna look something like this. We're gonna drop down. We got some support, a lot of support within this, including the triangle itself. We should bounce up, and we are going back to where we should be going. So that's the next step in the AMC process. I have entered at the 37s, at the 41s. I think I exited around the 50s, maybe some in the 60s, but not a lot. It was a mess. I haven't organized my plan completely because you can't predict what's going to happen, but I did make a profit in the end. Now with the next case scenario, I have also predictions on how high it could go. I don't know if I have them here. Nope, I don't have them here. Let's see where I put them. You can potentially make some better calculations now. Okay, so if the first bottom to top was 800, time for some proportions. Ooh, paper. Who's seen paper in such a long time? So if our growth on the first one was 852.73%, our drop was 72, over 72. Then our next growth where are you? Oh, okay. Our next growth was 750%, and our drop, oh wait, did I do that right? 650. And then our drop here was another 60. Okay, so it's slowly decreasing over time. The proportion of each triangular formation, 850 divided by 72, the first triangular was 11.8. 650 divided by 60, it's got to be similar, 10.8. Okay, so we're dropping down a point each time. So 100, 200. So 850, 650, if I wanted to find a value in between, I gotta guess on the possible drop. Or I can guess on the 9.8 that our next proportional value is gonna be 9.8, so 11.8, 10.8, 9.8. And then if we have another similar growth, we're looking at about 700%. So I'm gonna say 700% average over 8x drop from here. It's in between the two. It could be less, it could be more. So around the 280, so this is where I'll say it's a possibility it's going to be at 280, but that's not a psychological value. So now I'm going to look around because I know that 700 is a guess. So what are some psychological values around 280? Well, 250, 100% psychological value around here. 250, 300, also psychological value. So we can be anywhere here before the next triangle falls apart or starts forming the next pennant, if we don't have the mother of all squeezes happening. I highly doubt that's going to happen because hedge funds are going to find ways, as they always do, to try and stop it. But based on the previous two growths, 850%, 650%, I'm using a conservative average of 700%, but it could also be less. It could be 500%. So I'm going to also put a floor Where's the 500%? 500%. Let's call it 450, more conservative. So 200 here. Another psychological value. So this would be a range of where we could go next. Oh, based on the next FOMO, short squeeze, option derivative, hedging, algorithm, computers buying. So much buying is going to happen in the next few days that we're looking at about 200 to 300 range values. And then the drop, if we grow 700%, 250-ish, 250-ish would be 650%, no? 650%, 600, whatever. So 600 instead, I'll put 600 instead of 700. Seems a more conservative value. And if I wanted to find the x of that, which would be the decreasing value, how much would it decrease after divided by 9.8? It would decrease 61% from this 250. And it seems like it could go down to about 100 psychological value, 100. So the drop after our growth would be around 100. The maximum possible growth I would predict would be around 300, very big mental break area. A higher probability would be 250. It's a good psychological point for support. And I honestly feel like we're going to breeze through 200. It should not even be a question. But depending on the tactics of the hedge funds, we could also drop and stop at 200. So based on previous patterns, previous ups and downs, including back in January and June, the third possible mathematical proportion, we're looking at 300 top max to 200 min, plus a actual drop after we reach our peak to around 100. So if you can literally buy now, hold until 200, even 200, and then come back in at 90, $100, you're basically increasing your share count plus making more money at the same time. So that's my AMC prediction. GME, honestly, for those in GME, what I see here is absolute madness. We haven't even completed the first triangular formation. We have left it. We have left that triangular formation. In fact, I'm kind of considering whether we have 1 point, no, I see 1.2 point. We either have left it or we are continuing on from it, but I need 3 points. I need to connect 3 points. 1, 2, 3 for the bottom, that's good. And I guess I can be a little conservative over here. 1, 2, 3. So I can, yeah, 1, 2, and 3. Okay, I can say that we haven't left the triangular formation here. But if that's the case, boys and girls, what could GME do? Well, if the first, and we don't have a lot of options or historic data, but if the pre-squeeze value was 15 and the after squeeze value was, holy moly, 2,721, that was the squeeze. That's how much percent it grew within daily, call it 2 weeks, right? So in 2 weeks, 2,721%. If that's our kind of gauge for the proportion, we do have a pretty big down. This is a huge down, but this was also promoted by media, promoted by extra short squeezing. This was not a natural down. I would call this one the better natural down, so I'm gonna go ahead and drop this down here. 60% back down. This is actually very familiar to the 60% drop in AMC. That's an average drop. But if we have a 2,000% growth, guys and gals, I can even be, well, 2,700. I'll be conservative. Let's just do 1,000%. You know, I'm not even using the full 3,000, right? So let's say we only get to 1,000% growth. That's super conservative for the next squeeze. We are now at $200 or $2,000. This is should be an easy value to achieve based on squeeze factors, based on algorithms, based on any sort of FOMO buying and all that stuff that piles in at once, right? But let's say we go to that 2,000% value. Let's go 2,700% value. Let's go all the way. We're looking at a $5,000 per share value in GME. Will it happen? I'm going to call it a orange line because the probabilities of us getting that high are probably pretty damn slim. People going in now at $100, $200, how many are going to leave at 1,000? How many are going to leave at 2,000? How many are going to hold all the way to 5,000 plus? We don't know. So that's a value that we're not very much sure with. But based on the limited data of a single squeeze, we can kind of assume that much of a trajectory up. Volatility is very low. I might actually buy some call options on GME. We'll see. We'll see. I don't know if I'm going to play it, but I think I'm going to play it. So that's the GME AMC. The other things I'm kind of looking at is, again, since crypto is going down, my SHIB, I'm kind of halfway out. I'm 20-30% out. But SHIB coin doing all right, consolidating. Crypto total going down, so SHIB is going to go down. But each time it does find a very solid support. I'm predicting that it could go down to about 2.1. Wait, this is LRC. Okay, this is LRC. Loopring. Loopring is also going down, has good support, but it's on a downtrend, so I think it's going to really catch itself around $2. Psychological point again. The SHIBs of the world still doing great. Just huge gains, got to come back with some huge drops. But I believe I'm looking somewhere around the 3-point value of SHIB before I get back in. I do have SHIB staked and holding a little bit here and there. But I have released some funds for that drop so I can buy some extras down below. It's just that we're kind of entering that negative bearish territory, right? The total crypto market is going down, so I'm going to try and catch it at the bottom. Risky, but you know, I still have some being held, so I'm not missing out on anything, but I can also grab a little extra down here. And then this is where I would probably begin my crypto sell off, somewhere within this range, probably the upper area. And then I'll just watch what happens. If crypto keeps going, sick. But if crypto falls apart, fuck. Like, at least I'll be out and I can maybe make some more moves later. But it's gonna be a crazy week. It's gonna be a crazy end of the month. Absolute insanity is happening the week of 14th of November. I cannot imagine what's gonna happen in December, where the ceiling, the debt ceiling gets well passed or denied, because if it gets denied, we're pretty fucked. The US market's gonna have this huge drop. But if the US market has a huge drop, expect the crypto market to do really good. So December, where's December? This is January. So potentially December is catalyst. This arrow here is the arrow for the budget ceiling not being raised. So we'll have to wait and see. When I get more info, when it gets more interesting again, it could be tomorrow, it could be next week, I'll make another video, but that's it for today. It's my overview of what the heck is going on in the market. Good luck, stay safe. Don't bet on anything that I wouldn't bet on, which is, I don't know, not financial advice. And